What's good, Joe? It's your boy Rick Got Options, and thank you for joining RGO on another episode of Sunday Stocks. And like I always say, whether the market's up or down, we see green. And right now, we're seeing a little bit of green in the market. We got a little bit of light from the FOMC meeting. So without further ado, let's get right to it. What you're looking at is the SPY chart. It's the 5-minute chart to be exact. And we talked about in Discord how we're going to inverse the initial move on FOMC, right? So when the FOMC meeting starts on Wednesday, we played the inverse. So we inverse the initial move. And what you want to do is wait for the minutes to come out at 2 p.m. When 2 p.m. Hits, the minutes will come out, and then boom, the market is going to make a move, and we inverse that initial move. And that initial move was to the downside, and it was in confluence with the 200-day moving average, and it bounced from there, boom. And then so after that, you will wait for Powell. If you missed that move, you wait for Powell to start speaking at 2:30, and it's going to do the same thing. The market jumps up and does not break out through critical levels, then it's going to come back down. And if it breaks down without breaking through critical levels, it's going to come back up. So 2 p.m., that was the move. 2:30, we got a little downside. We opened up, we stayed stagnant right here, and didn't go anywhere. Used the 50-day moving average as support, and then we start to run up all the way up to about 570.91. Wednesday was the high, right? Now, I don't gatekeep. I don't just talk on my ass. I keep it real. So this is what we did in the Discord. Right when 2:30 hit, we spoke on what was in play. The 567 calls are on deck. The inverse of the 2 p.m. bounce on the 200 DMA on the 5-minute chart, about to drop the chart. Did that. We inversed the initial move. Let's see if it makes it to 570. Did all of this within about 15 minutes, and we made some bank. Don't believe me? Check out the winner circle. We're going to go up to the 19th, and this is what we did. 137% on the day with the two trades right here. Got out the swing play right there for Thursday, and then we played accordingly. People making money within the hour, $700, $500, $600, things of that nature. It barely took us any time to do that, right? And that's because we talked about what we're going to do. We understood what the verbiage was. I gave everything to read up on and to understand what the FOMC meeting and what it was all about and what we're looking for, right? And it's pretty clear, in my opinion. If it's not, just hit me up, leave a comment, anything like that, and then let me know how I can explain it better for you guys. But also, when we called it out, right? When we called it out, we just kept engaging, and that's the important part of everything. You know what I'm saying? That's the important part. Also, we're going to be here in the short-term central, long-term, 0 DTE. But we played no games when it came to this because this is what we said we're going to do, and we would have did the same thing to the downside just by getting puts. Now, with that being said, let's address the elephant in the room, which is this bubble that is starting to develop in the market. You're not going to see it here. What you can see, though, is that we're based around the 78% retracement level on my multi-year Fibonacci retracements, and we have not gotten over the 200 daily moving average for SPY. Now, that right there is alarming because we're looking the same across the board with triple Qs, and we're looking the same with IWM. We're going to go back to the VIX. So with the VIX all looking identical. Going back to the VIX, this does look good for the market because as long as the VIX is going down, the market will go up. But the VIX bounces up the 50-day moving average or 200-day moving average from 18 to 1724. Then, yeah, we can start making a push back to the upside for 30, and that's bad for the market. But if we get all the way down here to 14.50, $14.95 or $15, then we're fine, right? But let's go back up to SPY real quick and talk about this. We're still under all the moving averages. I'm not completely bullish until we break out of here. This just seems like, the market's waiting for what's going on. So back to me addressing the bubble. I'm saying it's a bubble forming in the market. Don't think it's quite here yet. We can get back up to the highs, then sell off viciously or start to sell off from here because who in the hell is going to use Afterpay for DoorDash? And listen, if any of you big backs are doing that, that's cool with me. You know what I'm saying? But when you see things like that, like Afterpay, after eggs then went up to like $10, inflation is real. That's why the inflation data was projected to be the same as last month's. You feel me? Like they're trying to give us a soft landing in the market. I'm not too big on like, we're going to the highs, we're going to stay in the bull market forever. No, I think we're going to come down. I think we still have more of a correction to make. And then that's when we're going to get back on the bull. But other than that, SPY needs to break above this 200-day moving average in order to make something shake. I would love to see 590, then come back down and just trade in this range and then break out. You dig what I'm saying? But when we go to the Mag 7, and we're going to start with Tesla, we got this big body candle right here. Tesla's trying to break out and then get back on the bull, get to the 350 area. I know that's about 102 points out, but look at the 9-day EMA. Boom. The 9 EMA look like it's curving up. We need to get above the 20 EMA right here at 265. Then we'll be fine. And then the 200-day moving average is the big dog. That's what you need to break out of. Then you hit the 50% retracement level. Strong psychological area for all stocks when you have the Fibonacci retracing up. And then Tesla can run all the way back up to 355, 356, and possibly come back down and stay around the 300 range for a while. That's what we're looking at with Tesla. Apple, same thing, trying to get out. Had a big body candle on Friday. 9 EMA moving up. 20 EMA, the next level of resistance. It has to break out in order for me to be bullish, but I like 230. Not this week, but, a couple weeks out. April could really make something shake. If the market really did bottom from this correction in March, then yeah, it's going to look like 2020. It's going to look like 2022. It's going to look like 2008. It's going to look like all those dates because it's wild. But that bubble, you got to watch out for that bubble. So when it's time to sell, please get the puts. Please. Just like we did at the beginning of this month, we didn't try to fight the falling knife. Don't try to fight it again because we can run all the way back up here, top out, and then start dropping. Those are the things you need to look for. Google, everything seems like it's at a bottom right now, right? We got this descending wedge right here, and this 200-day moving average just needs to get retested in a breakout in order to be bullish again. Under here, you're just going to get caught in a whipsaw. And I just want everybody to be protected. Amazon, I have it drawn up right here. We have this nice Morningstar doji, but we're just sitting here to support my 66618 range. I like Amazon to break out the 200-day moving average, get to about 210, come back down to this 200-day moving average area, and then rip all the way to 230. So that's how you can play the upside. I would recommend people, if you're going to play calls, get it about a month out. Don't try to do the weeklies. You'll get burned that way, especially if you're new to the game. You don't know what you're doing. So that's what you got to look at. The Mag 7 is going to show you what's going on in the market. It's going to push you to the promised land. Again, looking at the Mag 7, Microsoft is in the Mag 7. It looks identical to Tesla. It looks identical to Apple. All these things are running together, so you need to play accordingly, right? And we're going to talk about all that stuff in the Discord. We're going to talk about all that stuff in the Discord, so just be prepared to get the drops in the Discord, whether it's the long-term general chat, winner circle, charts and analysis. We talk about everything in here. We're getting the bounces and meta. We're talking about 570 breaking down. We're talking about all that stuff. So Discord's going crazy now. People are talking in there. I know you hear the notifications. Just lock in with me. You'll be right. We're not going to ever gatekeep. We're going to keep you up to date with everything going on. Whatever we see, you're going to see. Whatever you don't know, we're going to inform you about. You feel me? I want to build you up to be the biggest, best traders ever. So if you're rocking with me, please hit like, hit the subscribe button. You know what I'm saying? Go to the Instagram, go to the bio, click the link for the Discord, subscribe. First 3 days is free, $20 a month, $149.99 a year annually. So that's all I got for y'all today. We're going to have more this week. Be sure to hop on a Zoom call tonight because it's provided to everybody that watched this video at 9 p.m. and we're going to get it popping, yo. Again, like I always say, whether the market's up or down, we see green.